Good afternoon. I hope you're doing well. A comment in one of my videos asked me to continue sharing the futures rollover process from one expiry to the other. And so, since today is the expiry of the November series and I have time available at the moment, I thought I will share the process of rollover and a few points that work as a framework for decision making. Each video needs to be seen in continuation with the previous video, where analysis on a longer time frame serves the basis of direction on a shorter time frame. So in the previous videos, I have already discussed and we have established that Nifty, we can see this is the Nifty 50 index, on the monthly time frame is clearly creating higher tops and higher bottoms. And the channel pattern in between has created a flag formation, and the breakout of it has a target of 23,000. Currently, Nifty is going through what looks like a consolidation. So the consolidation can be seen here. Since these are the monthly candlesticks, we know that this consolidation has already lasted 5 months. The question now is, in which direction is the consolidation likely to break? That is, will it break in the lower direction or will it break in the higher direction, or would the consolidation continue? Conventional theory on technical analysis says that whenever a trending security forms a range, the breakout of the range is in the direction of the preceding trend. Since we can see that the direction of the preceding trend leading into this range is upwards, the general bias or the total basket of 100%, a larger chunk of it will be assigned for the long direction. Then the second largest chunk will be assigned to a consolidatory direction. And finally, the least possibility will be assigned to the short side direction. This information is useful when we are creating long-term positions, because the time of reference is the monthly chart. But since today we are discussing futures positions, so the time of reference has to shift to the daily charts. But the analysis that we do on the monthly chart continues forward and influences the trades that we take on the daily. So here we have the daily chart, and in this daily chart you can see the consolidatory range that has been marked. Currently, Nifty is clearly at the high of this range at 20,100. 3 trade sessions from now, we are likely to have the state level elections of several states in India. It makes sense for the market to consolidate in this direction for some time, or to anticipate that the outcome of the result will be perceived as favorably from the market, which means either the ruling party will continue to rule, or there will be a change in the ruling party, or it will be a hung assembly. Regardless of the outcome, if the traders feel that the market is going to perceive this outcome as positive, it makes sense to buy into any dip on the extremities of the range. Whereas if one feels that the outcome could be perceived as negative, it makes sense to even short at the extremities of the range. Regardless, we already have our assessment derived out of the monthly charts, and we will assume that given that Nifty has a flag pattern target of 23,000, the election results or the fundamental results in general are more likely to be in a favorable direction, and therefore it makes sense for us to assume that the breakout will be on the long side. On the daily time frame, however, when we follow strictly the Dow Jones pattern, we see that after this higher bottom was created, Nifty did create another top. However, the higher top did not hold for good, and Nifty proceeded to creating another higher bottom. It is now expected that after creating a deep higher bottom, the market would go on to break the previous higher top. However, Nifty formed a lower top followed by a lower bottom formation. So this is basically a more accurate version of how you would be seeing, where after this higher bottom you would have had to go long, expecting this higher bottom to hold, but once Nifty broke the low and created a lower bottom, you have seen a lower top, lower bottom, and you will look to short at some value. So let us say you use this pivotal higher bottom as a reference to short and sell at Nifty 19,350, 400 levels. You would have subsequently booked a loss. Now you would expect this lower top to hold, and then if you would have shorted, you would have again booked a loss. These multiple sells, these multiple breaks of pivots would have now forced you into a net long position on the market. However, what doesn't change is that whenever a market creates inconsistent highs and lows, it is ranging on the particular time frame, and therefore a ranging market will necessarily have long trending shorts and short trending stocks. And it becomes our objective to buy the dip of long trending stocks and to sell the rise of short trending stocks. Because since we can see from the point of previous lower bottom that is created, it is clear that even if Nifty were to reverse from this, then from the reference point of this lower top, I will just mark this in black color and I will make it bold, slightly more bold, that from the reference point of this lower top, Nifty has certainly gone on to create a higher top, and structurally this higher top has become a double top, which means there is no ambiguity that the market is still in a range, and if it is in a range, it generally implies that it is critical for us to have both long as well as short positions on the market. I will now share how this features in my futures positions. So here, once we log into the futures positions, you can basically see that I have a total of 12 positions created. I will just go through them. We have long on Adani Ports for December series, which means the rollover for this is already done. We have long on Apollo Tyre for November series, long on Coforge for December, long Eicher Motors for December, long Hindustan Copper for December, long Hind Petro for November, long IDFC first for December, India Mart for January, Lal Path for November, and Pidilite long for November. PEL and SBI cards are short for December series. The question is now, what's the position outlay? All we have to do is we have to count. So since my watch list is inclusive of all the 200 stocks, therefore we have to count the number of longs and the number of shorts. So we will see that the number of longs here are Adani Ports 1 lot, this is 2 lots, so this is 3, 5, 7, 8, 9, 11, 12, 14 and 15 lots long with 4 lots short, which means that the ratio in the market is 15:4. And my objective now here is to close the position for November series, which means I will convert all November positions into MIS orders, which is Apollo Tyre, Hindustan Petro, Lal Path Laboratories, and Pidilite. These 4 positions for November series would be converted and closed, and the profits, if any, would be booked and settled. I hope this video has helped you in some way. I will see you in the subsequent videos. Thank you for your time.